Hello, welcome to Transversal Economy, a channel for economy, supply chain, global trade, and logistics. Today's topic is From Stagnation to Comeback, Japan's bold economic strategy. For years, Japan has been the world's biggest economic mystery. Its economy was dominant and a model for many nations. But something broke down with huge repercussions on its economy and finance. The enigma was no growth, no inflation, no momentum, but now something is moving in the right direction as wages are rising. Inflation is also picking up. Can we say Japan has found what held back its economy? Is it a real comeback or another false sign? Common conversation about Japan is aging population, slow growth, past economic giant, but authorities are trying to change the narrative thanks to multiple sectorial plans. Japan is quietly rewriting its economic playbook through monetary policy, corporate reform, and supply chain repositioning. If it is successful, it could reshape global trade, capital flows, and even challenge the current economic order. Today's video will highlight Japan's strategies and how to get out of decades of stagnation. Section 1: The Lost Decades. Explained. In the late 1980s, asset prices exploded. The real estate market was in crisis. Stock markets underperformed. Then the whole economy crashed. Bad loans increased in banks' books. Companies stopped investing. Consumers stopped spending. It was a long and catastrophic journey, what many analysts called the lost decades. There was no trust in the economy as no real growth registered, and wages stagnated, deflation set in, prices kept falling. Authorities tried all kinds of economic plans to revive the country, but no real traction to boost spendings and markets. We can count stimulus packages after other stimulus, near zero interest rates, government spending. Section 2: The Abenomics Experiment. In 2012, Japan made another bold move with Abenomics, an economic package under the Prime Minister Shinzo Abe. 3 pillars were the foundation of his economic plan: aggressive monetary easing, fiscal stimulus, structural reforms. To create inflation in the country. The central bank flooded the economy with liquidity. Interest rates dropped to zero, and even below zero after years of deflation. This time the result was encouraging. Stock markets surged, the yen weakened, boosting exports. Corporate profits improved. Satisfaction was not total with Abenomics. Wages moderately rose, consumer demand stayed weak, and inflation never became sustainable. A bit of a boost of the economy, but was not sustainable in the long run. Section 3: What's different now? Today, something unusual is happening. Domestic pressure creates inflation. Salaries are also picking up after long periods of waiting. Companies are playing their role by investing and increasing salaries. Consumers are not afraid to spend their money, and confidence in Japan's economy is coming back. At the same time, the Bank of Japan is changing its ultra-loose policy. Companies are diversifying away from China. Global supply chain is being readjusted. Section 4: Japan's strategic Position in a changing world, Japan offers stability. Neglict expert as a political alignment with Western economies, with the world economy being fragmented. Investors are looking for reliable partners, efficient economy, and resilient global logistics networks. Japan is marketing itself as a location for new investors and where goods can be produced and exported worldwide. Some technology sectors are already taking the lead with new investments, semiconductor manufacturing, but the technology advanced. Materials Japan is no longer trying to compete on cost. It's competing on precision and reliability, and in a world of uncertainty that matters more than ever, we can expect a return home of Japanese capitals, contributing to the growth of the economy. Section 5: The risks. Why the comeback could fail. Japan still faces major structural challenges. The economic turnaround is not definite yet. Some concrete actions need to be taken on these issues: an aging population, a shrinking workforce, high government debt. Inflation needs to be contained to not discourage consumers. Wages should not lag behind due to the pace of inflation. The central bank needs to know when to intervene to slow down the inflation. The recovery needs to be pushed up for resiliency. Conclusion: Japan has an opportunity to turn its economy around after decades of deflation. We are observing rising wages, returning inflation, global supply chain shifts. To say the least, Japan is at a turning point to get out of economic lethargy. Can it sustain the recovery? Economic transformations are gradual and need efforts from all. It requires a shift in behavior, confidence, and global positioning. If Japan succeeds, it won't just be a comeback story. Many economists can say the most entrenched economic stagnation can be reversed. On the contrary, it will be a signal that some economies once stuck may never fully escape. Japan is competing to be the best location where investments should flow in. So losing the actual economic momentum is not an option. Thank you very much. Please support our work by liking, commenting, and subscribing to our channel. See you on the next one.